Hello and welcome to Big Deal. I'm Nisha Poddar. Now, venture capital industry saw exits worth $6.5 billion in the last calendar year. Now, this year, we have seen a few exits while the pipeline for future IPOs from the startup space is strong for the second half of this particular year. It's time to focus on the key trends picking up for the venture capital firms. We have with us the industry bodies, IVCA's VC Council leaders joining us to discuss the state of VC world and the future trends. Let me welcome on the show Rajan Anandan, Prashanth Prakash and Manish Kheterpal. Now, gentlemen, so good to have you on CNBC TV18. My first question to you, Rajan, as this council leadership, what is the aim and where does VC industry need direction and support?
Thank you, Nisha, for having us. Prashanth, Manish, and I are very fortunate to be co-leading our VC council in the IVCA. We have a terrific council that we've assembled this year. Look, the Indian startup ecosystem, Nisha, continues to grow from strength to strength. The ecosystem is broad-basing every year. The number of sectors that are exciting continues to increase. We have ample dry powder. We'll talk about that over the next 20, 30 minutes or so. And as you've just started the show with, IPOs or venture-funded companies continue to accelerate. I think the best is very much yet to come. So, it's looking pretty good. Now, despite India being the third largest startup ecosystem in the world, the reality is India today gets less than 3% of global startup funding, right? So if you look at 2023, which we think is sort of the normal run rate year now, globally, there was about $300 billion of funding that went into startups globally. Of the 300 billion, about 7 billion came to India, right? So basically, less than 3% of global startup funding is coming to India. And what this really indicates is there's tremendous room to grow our ecosystem, both in terms of the kind of innovations we're going to see, but also the kind of capital that should be coming to India, both from outside as well as domestic capital. So in that context, the focus of our VC council over the next 2 years will be a couple of different areas. One, IPOs. We want to make sure that Indian startups continue to have very, very successful IPOs. Every year we should see more and more venture-funded companies going public. We'll talk about what that's going to take. Second, we want to free up domestic capital. So today, if you look at last year, for instance, right, over 85% of capital that was invested into Indian startups came from foreign sources. So domestic capital only accounted for about 15%. This number needs to go up. So we have a huge focus on how do we get more domestic capital to be invested into venture capital funds that then invest in Indian startups. The third area really is new fund managers and micro VCs, right? We are seeing a large number of new funds emerging. And as a VC council, we are going to provide, we're going to launch programs, provide a lot of support to help these new fund managers and these micro funds really be successful. And lastly, look, India is sort of entering in many ways the final frontier of startups, which is deep tech, right? A whole range of sectors that we'll talk about. And we as a council want to really focus on how do we make sure that we dramatically increase the amount of capital that is going to be available to invest in deep tech startup at all stages. So those are really the big four focus areas we're going to have over the next 2 years in the VC Council.
All right. Rajan, you have mentioned several factors which we can delve deeper into. But one important thing is that there is no dearth of dry powder, but it's about allocation in sectors. But on that note, also, I would like to point out that the liquidity flow had created a lot of euphoria in the last few years in the VC as well as the startup world. Now, my question is that while we are still banking on the US Federal Reserve to start cutting the interest rates for the sentiment to improve and the foreign fund flows to make their way back into India, at the present time, how are we grappling with this liquidity situation from especially the foreign capital, Manish?
Thank you for having me, and I'm very glad to address the elephant in the room about liquidity crunch. Let me just give you some numbers to put things in perspective. India venture capital currently has about 10 to 12 billion of dry powder. And that's just venture capital money that has been announced and allocated and raised for India. If you add to this private equity capital, this number significantly increases north of 25 billion. And as you understand, a lot of the private equity capital is also increasingly available for growth venture deals, for technology and for startups and so on. So in fact, the way we look at the industry today, for the size of India venture capital, that's about 8 to 10 billion a year, there is really not, holistically speaking, dearth of liquidity. What is actually happening, though, is that there is a reset of expectations. There is a reset of risk-return pricing. So if you double-click on where venture capital money is going, in fact, compared to 2020 and 21, the peak levels that we all compare to, in the seed to Series A, in the early stages of venture capital investing, where we say venture formation or early innovation happens, numbers have actually not decreased too much. They're probably like 15 to 20% off from those peak 2021 numbers. Of course, as you go later in the life cycle of investing, Series B plus and Series C plus, there is scarcity of capital. But what you have to understand is that this is more to do with momentum capital, or what we call gambling capital, that has gone away from the ecosystem. And we think that's good for the Indian ecosystem, for Indian venture market, because there the expectation of investors is that I am not going to underwrite the risk for a company where I do not see a clearer path to exit, where I do not see a clear path of building profitability at scale. So again, overall, holistically speaking, and looking at the dry powder numbers, it's not like there is a liquidity crunch. Of course, in certain pockets of venture capital, momentum capital and temporary capital has gone away, and we think actually that's a good thing for the market.
All right. So yes, market needs some bit of correction and sanity as well. But Prashanth, of course, lots of things to talk about, and especially with the strong IPO pipeline coming in where you can contribute. But first, let's begin with what are the key trends according to you for the VC world?
So, Nisha, great to be here along with Rajan and Manish. So I think, you can't talk about new trends without talking about AI. I mean, I think that is where all the momentum and the action is. There's a lot of, startups that are getting funded, about roughly 50 to 100 odd startups in the last 2 years have been funded just in the, AI first and the generative AI space. I think there's a real big shift towards manufacturing-led startups. And these are not traditional assembly type of manufacturing companies. These are manufacturing companies that are leveraging technology, whether it is semiconductor technologies, more IP. So these kinds of new age manufacturing companies are definitely a new trend. There's a big focus on sustainable materials and companies that are leveraging our agri input and agri materials to build more sustainable products, to build more sustainable green hydrogen kind of products. So there is a big shift towards building these products from the global south to the global north. So as there is a lot of digital transformation, and as you see more and more generative AI being leveraged in businesses, I think there's a big need for cybersecurity. So, and this is an area where Indian startups are starting to, leverage their deep tech capabilities for providing cybersecurity solutions for the rest of the world. And finally, defense and space tech. These are important areas for self-reliance of our country. And these are also areas where there is significant amount of spending, even within our country, and just not just an export opportunity. I think these are some of the areas that we see a lot of funding already going in, and significant future funding opportunities for our VC ecosystem.
Right. So, Prashanth, you enumerated many of the sectors of the future. A lot of them are at a nascent stage. And the cornerstone of any investment is also about sector rotation. 3-4 years back, what VC world thought was the sectors of the future now have seen their full cycle in a matter of a very short period of time. Rajan, you want to take that tough question of sector rotation. First, AI thrust, yes, but AI is going to be inbuilt in almost all the companies. So what is the differentiating factor which the VC world is backing? And what about the sectors of the past, say, for example, edutech and some of the others which are struggling? How does the VC world also tackle the casualties?
Yeah, I think, Nisha, firstly, I think Prashanth, spoke about this very eloquently, right? Like, every year we get asked as venture capitalists, what's the big new theme this year? Look, I think India is now well beyond that, right? So, if you go to the Bay Area in the US, it's all about AI. It's about artificial intelligence, right? I think India today really is about AI squared. But the first AI it's all about India, right? There's innovation in every single segment, right? Prashanth mentioned several of them, but you look at consumer brands, you look at retail, you look at healthcare, I'll talk about education in a minute. You look at financial services, massive amounts of innovation in fintech, many segments, as well as all the deep tech segments. So the first AI is all about India. And then the second AI is artificial intelligence. So India really is about AI squared. Now, in terms of sector rotation, look, I'd say the only sector where there was a significant amount of activity, let's call it 2 years ago, where today it's very muted, is blockchain, right? And Web3. That's the only sector. I would say all the other sectors, we continue to see activity. You go back to 2 years ago, there was a lot of activity in consumer brands, but they were mostly beauty brands. Today, there's beauty brands, there's food brands, there's home brands, and so on and so forth, right? You look at commerce, it used to be horizontal commerce platforms. Now we have the next generation of vertical commerce platforms, right? In payments, we had the first generation of payments companies. Now see the new generation of payments companies. Wealth tech is becoming very, very interesting, and so on and so forth. 2 years ago, we didn't have a lot of these deep tech segments, right? Semiconductors, green hydrogen, all the segments that space tech, for instance, right? Actually, by the way, in space tech, there was one startup a decade ago. Today, there's 190 Indian space tech startups. So really, there hasn't been rotation as much. I'd say, Nisha, what we've seen is we see the continued broad basing of the startup ecosystem in India, where we are seeing innovation in every single segment. Now, some of the nature of the innovation will change. During COVID, we saw a big boom in online education, right? So EdTech used to be perceived as only online education, whether it's K2, whether it's test prep, whether it's K-12, whether it's higher ed, etc. I think what we've seen is as COVID sort of ended and offline came back, we've now gone to hybrid models, right? So if you look at the companies that today are, by the way, education continues to be a very, very interesting sector, but not purely online edtech companies, right? You have to have very interesting hybrid models, and you have to obviously grow the right way, etc. So I don't think there's been, at least the way we look at it, and it'd be good to get Manish and Prashanth's thoughts. At least we don't think of it as there's been a lot of rotation. I'd say the one big focus area maybe 2 years ago that is less of a focus in India today, although globally it is coming back, is Web3.
Right. So many thoughts there on the kind of companies which attract the VC money currently, and how dynamics have changed in some of the sectors. And yes, I agree with you, Rajan, that many sectors had moved to omni-channel approach, hybrid approach after starting off as pure digital play. So that's the combination that is really in the works right now. We'll slip into a short breather, but we'll discuss the more important VC exits, mechanisms, and how is the IPO street looking for the startup world, for the VCs to make the right exit. We'll discuss all that and more with our esteemed panel right after this short break. Stay tuned.